Hi everyone, and today in this video we will discuss 3 companies where Goldman Sachs has given a buy rating and they are expecting more than 30% upside in these 3 companies. So any company we discuss over here is not a buy or sell recommendation. So the first company which Goldman has recommended is Solar Industries. So first let's look at what Solar Industries do. So they manufacture industrial explosive which is used in construction, infra, defense and space sector, which is 86% of their revenue, and the other revenue segment is the defense product, and within that they make missiles like BrahMos. Then they also make hand grenade, mines and warhead, and as of FY24 that is currently 14% of their revenue. And even if you look at their market leadership, so it's one of the India's largest manufacturer and the exporters of explosives, and they currently have 24% market share. And do you know what is the raw material that is used to make these explosives? So one of the key raw material is the ammonium nitrate, and recently in the past few years the prices of raw material were not that great, but even after that the demand was so high in the defense segment they were still able to make profits. And recently in Jan 2025 they signed an MOU with the Maharashtra government, and for this reason they are going to invest 12,700 crores in the Defence and Aerospace project, and now currently they are trading at a market cap of almost 1,25,000 crores. So it's a large cap company. And if you look at their other financial ratios, so currently their P is almost 100, their ROC is 38% and ROE is 32%. So we can say over here that their higher P valuation might be justified because of their other financial ratios. But if you look at their PEG ratio, so it's slightly higher to 2.4. And now if you look at their median PE ratio, so in the last 5 years, so their 5-year median PE is 63 and now currently it's 100. So historical median PE wise it's slightly overvalued. Then afterwards if you look at their financial numbers, so during March 2021, they had a revenue of 2,500 crores, and in 4 years, their revenue went up to 7,500 crores. And even if you look at their EBITDA margins, which was 20%, now it's currently 27%. So I was holding this stock at around 3,500 rupees, and after that, I think I sold it around 4,000 rupees. But now I regret that decision because it's currently trading at 13,000 rupees. So I have missed that bull rally in the company. Now coming back to the financials, and if you look at the net profit, so it went up from 288 crores to almost 1,300 crores. So this is definitely a good growth we can see in the company. And one of the main reason why defense companies are doing very good is obviously because India is investing a lot. Now afterwards, if you look at their balance sheet, so currently they have approximately 4,300 crores of reserves and their debt is only 975 crores. And compared to past few years, they have increased their reserves very nicely. And if you look at their fixed assets, so that has also increased from 1,500 crores to almost 2,700 crores. Then afterwards, if you look at their cash flow statement, so compared to 656 crores of CFO in 2023, now currently they have almost 2,500 crores. So this is definitely a very good sign. Then afterwards, if we come to the ratio table, so their working capital days has almost been the same compared to the past few years. But if you look at their ROC, so that has went up from 25% to 38%. Then next, if you look at their shareholding pattern, so promoters are currently having 73%. Then within DIS, there are multiple funds like SBI Equity, Kotak FlexiCap Fund, and HDFC Mutual Fund. And now let's take a look at the technicals. So almost 3 years ago, during Jan 2023, it was trading around 4,000 rupees, and even I was holding this stock during this time. But after that, we can see that they have given a very good bull run and it went up to almost 17,000 rupees. And now for few months, it has been consolidating in a range and trading at almost 14,000 rupees. So what do you guys think about this company? Write down in the comment section. And now let's come to the next company, which is PTC Industries. So if you look at some of the financial ratios of PTC Industries, so it might look very absurd. So they have a PE of more than 400 and ROC and ROE less than 10%. But then one question should come in our mind, that why Goldman Sachs is giving a recommendation of this company. So if you look at their product portfolio, so they manufacture different type of precision metals like the stainless steel, duplex, nickel, alloys. But one of the interesting and the key material which they are manufacturing is the titanium and super alloy, which is used in the aerospace and defense sector. So they make these titaniums which are heavily used in the aircrafts. And there is a data point which says that the titanium usage in the aircrafts has increased from 5% to almost 20-30%. Next, if you look at their geographical split, so most of the revenue is coming from the export segment, and they have some very big clients like Rolls-Royce, Siemens and etc. And if you look at their expansion plans, so they are going to start a new manufacturing facility, and that will be fully integrated with a titanium and super alloy mill. Then afterwards, if you look at their median PE ratio, so their 5-year median PE is 271 and now currently it's trading at 400 PE. So valuation wise, I'm not sure if it's looking very good, but let's see. If the Goldman is giving recommendation, so it might do good in the coming future. Then afterwards, if you look at their financial numbers, so in March 2021, they had a revenue of 163 crores, and in March 2025, they gave a revenue of 308 crores. And for the last few years, their EBITDA margin has almost been around 24%. And one of the interesting point is the net profit, which went up from 13 crores to 61 crores. Then afterwards, if you look at their balance sheet, so currently they have reserves of 1300 crores and they have a negligible debt of 61 crores. So they have significantly improved their balance sheet. Then afterwards, if you look at their cash flow statement, so their CFO is positive 14 crores and they have a net cash flow of 55 crores. But one of the red flag in the company is their cash conversion cycle. So that has went up from 507 to almost 1300 days. So this is definitely not a good sign. And afterwards, if you look at their current shareholding pattern, so promoters are having 60%. And if you look at DIs, so there is Motilal Large and Midcap Fund and they have increased their holdings from 2.6% to 3% in the company. So this is definitely a good sign where Motilal has increased their stake. And now let's take a look at the technicals. So 2 years ago, they came up with an IPO and they got listed at around 4,000 rupees. And after that, the stock went up 4x from 4,000 rupees to almost 18,000 rupees. And since July 24, it has been consolidating around 15,000 rupees. But recently in the past few months, we can see some high volumes and currently the stock is trading in upward momentum. So what do you guys think about this company? Write down in the comment section. And now let's come to the last company, which is Azad Engineering. So Azad Engineering make different type of precision components, but one of the main components they make are the airfoils and the blades which are used in turbines. So these airfoils and blades, they are used in multiple industries like the energy, oil and aerospace and defense sector. And if you look at their industry vertical, so almost 80% is in the energy and oil segment and almost 20% is within the aerospace and defense segment. Then afterwards, if you look at their geographical split, so almost 90% of the revenue is coming from export segment and they are exporting to over 15 countries like UK, France, Germany, Japan and much more. And if you look at some of their financial ratios, so currently their stock P is 108, their ROC is 12%, and ROE is almost 9%, and they have a slightly higher PEG ratio of 2.3. Then afterwards, if you look at their median PE ratio, so their 1 year median PE is 111 and currently it's almost 108. So this is a recently listed company and that's why we are looking at their 1 year median PE. And if we compare their PE with the blue EPS bar, it is looking undervalued. Then afterwards, if you look at their financial numbers, so from 122 crores in March 2020, now they have given a revenue of 453 crores in March 2025. And along with that, their EBITDA also went up from 41 crores to 161 crores. And lastly, if you look at the net profit, so that also went up from 21 crores to 89 crores. So their net profit has been very fluctuating in the past few years, but now it's growing very nicely. Then afterwards, if you look at their balance sheet, so currently they have reserves of almost 1400 crores and their borrowings has increased from 39 crores to 252 crores. And the major part is the long-term borrowings. Then afterwards, their another growth trigger in the company is their fixed assets, which has went up from 210 to 414 crores. Then next, if you look at their cash flow statement, so currently their CFO is 63 crores compared to negative CFO in the last few years. And within their investing activity, so they have invested 275 crores in fixed assets and 622 crores in other investing items. Then afterwards, if you look at their working capital days, so from 120, it has went up to 218 days, which is a red flag. And compared to their historical ROC, so from 21%, now it's currently at 12%. Then next, if you look at their current shareholding pattern, so promoters are currently having 55%, and within FIs, there are some big funds like Abu Dhabi and Nomura Fund. And within DIs, there are two funds, which is ICICI and Kotak Fund. And now, let's look at their technicals. So during Jan 24, they came with an IPO and got listed at around 650 rupees. And after that, in June 24, they gave an all-time high of 2000 rupees. And after giving an all-time high and for more than 1 year, now it's consolidating in a range. But the good part in the stock consolidation has been the PE re-rating, where in Jan 25, it was trading at the same price it is currently trading. And during that time, their stock PE was almost 140 and now currently it's 100. So thank you for watching this video. What do you guys think about these three companies? Write down in the comment section and see you in the next video.